right, so this is the breaker block strategy that I've been speaking about. Okay, so it's just something simple that you can add to whatever strategy that you are using. Okay, let me state that this is not my brain child strategy. This is I think this is part of ICT's silver bullet strategy. Okay, but then whatever strategy that you are using, okay, as you all know, I use supply and demand, but then I've been able to add it up, okay, and it has made sense. All right, so it happened a few days ago, which I showed it to you, and this is another one also happened that I want to show it to you, okay, and it can just be a strategy that you can be trading, okay. Now, patterns in the forex market are repetitive, okay. That is why we have people that trade only Quasimodo pattern. We have people that trade only head and shoulder. We have people that trade only cup and handle. Okay, so if you master and understand just a pattern, all right, whenever you see them forming, you can be able to what trade them. Okay, so let me not speak too much. This is just how the breaker block strategy looks like. Okay, now one thing about me is that I love to observe patterns, all right, and I love to draw patterns so that whenever I see same or similar happening, okay, on the charts, I try to what make sense or meaning out of it. All right, so this is what a breaker block strategy looks like. Let's say that you are in an uptrend, all right, which you are having your higher highs and higher lows. Okay, you are having your higher highs and higher lows. All right, now this is, there will definitely be a block over here, okay, that went up to what, to break structure over here. Okay, so you will be expecting, all right, that if price comes back, it should respect this zone and continue the trend. Is that not it? All right. But whenever you see a violation of this order block, okay, that is when it becomes a breaker block. Okay, that is when it becomes a breaker block. Now, this strategy is on YouTube. You can just learn it from anywhere. But at the end of the day, there are some things that you also observe, okay, that you can add to it. Okay, now I have also observed the fair value gap, which I've added to my own. Okay, so it's just a little subtraction and a little addition that you can just come up with your own strategy. Okay, so whenever you see, all right, that this order block has been violated, meaning price came down to break this block that formed over here has become what, has now become a breaker block. So you can expect that if price comes back to this zone, it is going to respect it and then fall to the downside. All right, the same thing applies when you have a bearish structure. Okay, you have a bearish structure like this. Okay, you are expecting, since this block, okay, this block that you have here, all right, came down to break this structure here. Okay, you'll be expecting that when price pulls back, it should respect this block and then come down. All right, so whenever you see a violation of this block, okay, a violation of this block, you expect that price should come down, okay, and then start buying. Are you getting it? Simply, that is just what, that is just the breaker block that we are talking about. Okay, so it happened on AUD, USD the other time, okay, that I was able to take advantage of it, okay, and the NFP news has really pushed it down, right? Now, before this one happened the other day, which I want to show you, okay? I think I showed it to my students already. Now, if you can see this, we have price, okay, right from this zone, okay, currently giving us what? A bullish structure, okay, a bullish structure. All right, so this is like we are in an uptrend. Okay, now watch this carefully. This was the last low, okay, that price formed before giving us this high. Now, this block, okay, price went up to break structure over here, which will be expecting that if price pulls back, it should respect this zone and then continue the uptrend. Okay, but we've seen a violation. Once you see a violation, this one has become what? A breaker block. Okay, so if we extend this to the right side, okay, you mark the block very well. All right, if you extend this to the right side, you realize that price came back, okay, to test the breaker block, and then there was a fall. Are you getting? Even though this didn't go far, at least it respected it. All right, it respected it. Okay, so one thing that I've also seen, okay, on the breaker block is that when you have the break, okay, just when you have the break, you should make sure that you have a fair value gap, all right, above the other block. Okay, just like what we are having over here. You already know what fair value gap is. Okay, these three candles. Just when you have the break, okay, just look at the candle that broke the violated the other block. Okay, for you to see what? For you to see a fair value gap. If you see a fair value gap, it's a confirmation. Okay, at times you can just trade from the breaker block, or you wait for the fair value gap to be filled, maybe 50%. You can use the fib tool, all right, before you enter the trade. Okay, it all depends on where you see your confirmation. Okay, so that is why price came back to test this zone, and then it came down to grab this liquidity that he has generated over here. Okay, so what is the current one? This is the current one that happened. That was last Friday. Okay, that was last Friday. For whatsoever reason, I love using the 4 hours, 3 hours, 2 hours, 1 hour, and 45 minutes to mark my other block. I love using these time frames to mark my other block. Okay, if you ask me what is my reason, I'll say that because it works well for me. Okay, these are my best time frames that I use to mark other block. Okay, I start from the 4 hours. If I didn't get all the validities, I move to 3 hours. If I didn't get all, 2 hours, 1 hour, and then what? 45 minutes. All right. So this is what we are seeing over here. We have price. Okay. Moving up. Right. So this block that we are seeing over here. Okay. This block that we are seeing over here went up to break structure over here. Went up to break structure over here. Okay, so if we mark this block down, this, okay, if we mark this block like this, we can be expecting that, we'll have price back to this block and then continue the uptrend. All right, because we have a low, higher low, okay, higher high, higher low, higher high. Are we getting it? So we can be expecting price to come back to this zone and then we buy. But we have now seen a violation of this other block. Okay, price came down, okay, to break this block. Now that price came down to break this block, what did I say you should do? You should look at the top, the candles that broke, okay, that violated the other block. You should look for what? A fair value gap. Okay, so this is 1, this is 2, this is 3. All right, and this is a fair value gap over here. Okay, you still mark the candle, okay, and you wait for price to tap into the zone, okay, and then you go in for what? You go in for your trade, okay, whether you are buying or you're selling. But in this case, we are selling, okay. So price was hovering around this place, and there was NFP which gave strength to the dollar, and this is the result, okay, and this is the result. All right, so it's a very, very simple strategy. You can add it to whatever strategy that you're using, or even trade it as a standalone strategy. I get it. It's just a pattern. It is just a pattern. It's just a pattern that you need to be looking out for. Okay, this is just it. Okay, all right. This is just it. Others also call it the flip, okay, or the flip zone. Okay, so you can also call it maybe the break and retest. Okay, because definitely there was a zone over here. We have a break, we have a retest. I get it. But then I have just seen that whenever you see what do you call it, a fair value gap, okay, or an imbalance, it makes it more valid, or that's also another confluence. Okay, so you can back test it, you can check it out on your trades. If you happen to see it, you take advantage of it. If it works well for you, you let me know in the comment section. All right, thank you.